You know that feeling when you get into a trade and as soon as you enter, price does the exact opposite of what you thought? Or maybe you hit a great entry but you exit way too early, or worse, you hold too long and turn a win into a loss? Yeah, we've all been there. Today I'm going to walk you through how to enter and exit like a pro. No overthinking, no guessing, just a clear, repeatable process that works even if you're brand new. Hi, my name is Janet and this is Trade Travel Chill. If you're new here, welcome. If you're returning, welcome back. Be sure to hit that like button to support the channel and hit subscribe if you want more videos that help simplify crypto trading. Now inside TTC, we use a little more than what I'm about to show you, but what I am going to show you is the core concept we build everything around, which is Confluence. This is where multiple things are lining up, like structure, volume, EMAs, and Fibonacci. And if you can find Confluence with the indicators or tools you use, then you've got a trade setup worth paying attention to. So in this video, I'm going to break down each of those 4 tools one by one. Then I'll show you exactly how they come together to help you enter and exit with way more confidence. So if you've been feeling unsure about when to pull the trigger on a trade or how to know when to take profit, then stay with me as this video is for you. Let's get into it. Before anything else, we always start with structure because this is one of the most important things to understand when it comes to spotting entries and exits. Market structure tells you what the market is actually doing, not what you hope it's doing. Market structure is your map. If you don't know the structure, it's like driving to a new city with no GPS. You might still end up somewhere, but it probably won't be where you wanted to go. Now, an uptrend happens when the market is making higher highs and higher lows. That means every new high that price makes is higher than the last one, and every pullback, those higher lows, is also higher than the previous low. As long as price keeps pushing up and pulling back without breaking this pattern, then we're in an uptrend. If the last higher low gets broken and price makes a new low, that's a break in structure, which means the trend might be shifting. On the flip side, a downtrend is when the market is making lower highs and lower lows. So price keeps dropping to new lows, and every time it pulls back or bounces, it doesn't reach as high as the last bounce. That pattern of lower highs and lower lows tells us that the sellers are still in control. If the last lower high gets broken and price makes a new high, that's a break in structure, which again means the trend might be shifting. Now, if price starts to make equal highs and equal lows and is pretty much just bouncing between a support and resistance without breaking out in either direction, then we're likely in a sideways market, also called consolidation or ranging. These are the points we want to focus on for possible entries, either a retest of broken structure or a continuation after a pullback. Another way to quickly help us establish whether we are in an uptrend, downtrend, or just going sideways is to use the EMAs. So if price is above the EMAs and they are pointing up and to the right, then you would assume that we are in an uptrend. As soon as the EMAs start to flatten out and go horizontal, then we are more than likely going sideways and are just ranging. If price is underneath the EMAs and the EMAs start pointing down and to the right and start to fan out, then you would assume we are in a downtrend. So on the daily time frame and higher, if price is below the EMAs, then you would assume that we are in a downtrend. For the intermediate trend, we're looking at the 4-hour time frame, and as long as price is below the key EMAs, then you would assume that we are in a downtrend. And then your micro trend is the 1 hour and lower. If price is below the EMAs, then you again assume we are in a downtrend. Any trade that you take long would essentially be counter trend trading the macro, intermediate, and micro trend. However, as soon as price breaks above these EMAs on the micro trends, this could be an early indication that the micro trend may feed up into the intermediate and macro and flip those trends as well. So if I go back to the daily time frame, we can see now that price has been rejecting the 50 EMA and that has been acting as a dynamic resistance level, and now price is breaking through those EMAs. So as long as price can flip the EMA to then become support, then you would assume that the micro trend gave us the early indication that the intermediate and macro trends are now flipping to be bullish rather than bearish. The next indicator I'm going to show you is volume. Volume is one of the most overlooked tools, especially especially by new traders. Volume tells us how strong or weak a move really is. If price is breaking out of a range or pushing into a new high with strong volume, then this is a move we want to pay attention to. But if that same move is happening on low volume, that's a red flag. It could be a fake out. However, when we look at the volume here, this is nice because it's breaking out of that range and through resistance on increasing volume. So if we look at this example where price has ranged between a support and resistance level, and we look at this move to the upside, there was no volume supporting the move to the upside. If anything, the volume was decreasing as price was moving up, and once we finally did get that break, there was no massive volume to support the move, leading to a fake out, a trap move before price reversed to the downside. And when we compare that to current price action, we can see we have broken out of that range resistance level on nice volume. Now, if you want to upgrade from the basic volume bar, there's an indicator we use inside TTC, and that is called PVSRA. Select PVSRA candles auto override by 𝗟𝗵𝗃𝗲, and it'll overlay directly onto your chart. What I love about this is it gives you an instant visual read on volume changes because the candles themselves change color based on the volume level. So instead of always checking the volume bars at the bottom of your screen, you can actually see momentum building or fading right on price action. The PVSRA uses different colors to help you quickly assess the amount of volume that is coming through in the move. The green and red candles show us the volume is greater than 200% of the previous 10 candles. This often signals market maker activity, big moves, lots of attention. The blue and magenta candles show us volume is over 150% of the previous 10 candles. So it is still strong, often indicates momentum is slowing down to take a breather. However, you would still double check the volume bar down the bottom here, because even though this candle here has lit up green and shows us that the volume is 200% more than the previous 10 candles, if the 10 candles before this green vector don't have much volume, then it's not going to take much for this candle to light up as a vector candle. So if you're new to volume or just want to get better at reading it, this is one of the easiest ways to level up. Price action plus volume is already powerful, but PVSRA just makes it easier to spot what matters faster. Now let's bring in one last piece that really ties everything together, which is Fibonacci. Fibonacci helps us define high probability zones for a pullback, especially when price has already moved and we've missed the first leg. It helps us to figure out where the market might retrace to before continuation. How I like to draw fibs is from the most recent low to the most recent high if I am looking for continuation to the upside. We always need to wait for price to finish pushing to the upside and start its retracement before we can draw the fibs on. Otherwise, you're going to have to continuously keep moving your Fibonacci retracement tool up if price is still moving to the upside. From here, I pay attention to 4 key retracement levels, and that is the 38.2 fib. This one would be a shallow pullback, and it means buyers are strong and taking control early. The 50 fib retracement level, this is your balanced pullback, a healthy correction in a trending market. 61.8 or 65% is the golden pocket, which is one of the most respected zones when it comes to crypto trading. And the 78.6, this is your deep pullback. This is the last line of defense before the trend risk flipping. The deeper the pullback, the more cautious we need to be with stop loss placement and exit planning. From here, you wouldn't just pick a level and hope. You want to look left and ask which one of these fib levels lines up with previous market structure, a support or resistance, an EMA, or any other key level. So for example, I'm going to draw a horizontal line on each of these fib levels so we can go back and find the one that has the most confluence. So with the 38.2 retracement level, I can see it was a previous resistance level, and if I look left, it was a previous support as well. I can also see that it is floating between the EMAs. The yellow one is the 50 EMA and the green one is the 200 EMA. If price is to consolidate or go sideways, then the 50 EMA may actually catch up with price, which would make this level even stronger, and we may actually bounce there. When I look at the 50 fib level, not much is lining up with it here, but if we look left, I can see that it has held as support as as well. And it would nearly be a full recovery of this vector candle. And actually, I'm going to go back to last week and see where the low of the week was. So the low of the week is the lowest point that price went to the previous week. So the low of the week lines up with that 50 fib level roughly. So I'm just going to label that level low of the week. When it comes to the 61.8, 65, which is the golden pocket, it would be a full recovery of this vector candle. And I can also see that it has held as resistance here, support here. And if we look left, I can also see that it has held as support as well. And when I look at the 78.6, I can see it has held as support here. And if I look left, it has also held as support here. So now it comes down to a process of elimination. You want to find the one that has the strongest confluence. So far the 38.2, I'm going to leave this level here, and the 50 fib level, I also want to pay attention to that because it is a key support area that we use in TTC, which is the low of the week. The 61.8, this one doesn't have as much confluence for me, and the 78.6, neither does this one. So my key levels to pay attention to when it comes to the Fibonacci is the 38.2 and the 50 fib level. So once we get multiple confirmations for the fib areas, that's what's going to give me confidence. So let's just play this forward a little bit. So this is what I was saying before when I was talking about the 38.2, that if price was to consolidate or move slowly, then it would give time for the 50 EMA to catch up with price. And it is doing that so far. However, we still need to wait for candlestick confirmation. So let's play it forward a little bit more. Bang. So there's no entry there. You would wait to reassess the next Fibonacci area. So I can see that the low of the week has held around that 50 fib area, and I have a nice bullish candle. And it has happened in the US session. So let's just play this forward a bit more. Yeah, cool. So now we have a big bullish engulfing back through the EMAs, and it looks like our 50 fib level has held. So from here, I would expect price to continue to the upside. Yeah, nice. Okay, that's what it did. So when it comes to Fibonacci, we want to wait for price to react at either of these key levels, and then you want to look for rejection candles. So in this case, that would be bullish candles, and we have our hammers here, and then we have this bullish engulfing. Okay, now let's put all of these tools together and walk through how I actually use them in Confluence. All right, so now you've seen how each tool works on its own. Market structure, volume, EMAs, and Fibonacci. Let's talk about what it looks like when they all come together. Because when you're entering a trade, you don't want to just rely on one signal. You want to see multiple factors lining up. This is what we call confluence. Now, there are going to be times where everything aligns perfectly, and other times where maybe only 3 out of the 5 things are lining up. And that's where you need to make a judgment call and ask yourself, do I have enough confirmation? What's the candlesticks telling me? Is there a clear rejection, strong volume, or a key break of structure? Some of the best trades don't have every single box checked, but they still have a strong edge, and that's what we're looking for. All of these tools, structure, volume, EMAs, and Fibonacci, can signal 2 types of opportunities: a potential reversal or a continuation of the current trend. So first, let's focus on how they can help us spot a high probability reversal setup, and then we'll look at how to use them for continuation entries. Now I'm going to use the 1 hour time frame to get our overall direction, and then I'm going to use the 15-minute time frame for our entries. So currently I can see that we have lower low, lower high, lower low, lower high, lower low. So clearly we are in a downtrend. The next thing I want to do is mark out any key support and resistance zones. So in TTC, we use the low of the week and the high of the week. The low of the week is the lowest point that price went to in the previous week, and the highest point is this point here, and that is going to be the high of the week. I can also see the previous week. This point here was the low of the week, so I'm going to mark that area out as well. So I'm too late at this point in time to be looking for short position. As I can see, we're at a support level. We don't want to be shorting into support. First, we'll look for a change in market structure to tell us whether we're going to reverse around our support area. However, if price break through the major support areas, then we would be looking for continuation in that direction. The next next thing we want to look at is volume. So I can see during the move down, the volume was increasing on this red candle. However, since this last spike in volume, the volume has died off and now we're at that key support area with bullish candles. So now I'm essentially just waiting for the change in market structure. From here, I can see that we have created a higher low. However, the bearish market structure still remains intact as we have rejected the 50 EMA, creating another lower high. In order for me to think that this is going to be a reversal and break to the upside, I want price to break the last key lower high, which is this point here. So price continues to move up. It has broken above this point, creating a new high. And I can see that that move came in on increasing volume. And this is where I am now interested in looking for an entry to go long. So I'm going to draw a Fibonacci level from the most recent low to the most recent high. And I want to see which one of these Fibonacci levels has the most confluence with other things, whether that be market structure, EMAs, support resistance levels. I also want to pay attention to any unrecovered vector candles, because when these candles move rapidly, they create areas where the market maker absorbs liquidity, and these areas need to be refilled as they disrupt the natural order of buying and selling, essentially leading to imbalances. As price starts to reverse, it tends to revisit these imbalanced zones, targeting areas not fully recovered to ensure balance is restored. So currently I can see the 38.2 lines up with the previous low of the week level. I can see the 50 fib level lines up with the previous support area. The 61.8 is a full recovery of this unrecovered vector candle. So from here, I'm going to drop down to the 15-minute time frame, and essentially what I am looking for, once price comes down to one of these areas, a change in market structure on the 15-minute time frame. So let's drop down. So currently price is at the 38.2. I can see one bullish candle. However, that's not enough. I'm essentially looking again for an early change in market structure. Now I can see we've had a nice bullish engulfing here around the 50 fib area, and we have a little higher low. So now that we have our entry, I'm going to zoom back out to the 1 hour time frame, as this is the time frame we are trading. The 15-minute was just the time frame we were looking for our entry. So our take profit area is going to be the next high, which is this level here. And if price manages to break that level, then we're looking for the next unrecovered vector where the buyers pretty much gave up and the sellers won out. And that's going to be our next target should price break resistance. So let's play this forward. Great, we have now hit our original take profit, and for some people that is a 2-to-1 trade. If that meets your minimum risk to reward, then you would just take profit and close the trade out and look for a new entry. However, if you are someone who thinks I've potentially caught the start of a new 1 hour trend and we may continue higher, then this is where you would pay attention to market structure. You may decide to take some profit here and let runners run, as long as market structure remains intact. In that case, your next area for take profits is going to be any other key resistance levels, unrecovered vector candles, or EMAs. So let's just mark out one. So let's play this forward. So currently, this move here has created a new high. As long as we can create a higher low above this point, then bullish market structure remains intact. So currently, this is a higher low, and bang, we have broken through that resistance area, taken out this one, and we want to pay attention to the volume here. I can see that volume has increased, so let's double check it. Yeah, great. So when a resistance or support area break on increasing volume, then you should be looking for continuation in that direction. So if we play this forward, we might actually hit our target above price. Currently, that's a small rejection under the 800 EMA, as long as market structure remains intact. So now I just need a higher low above this point here. As soon as that breaks, then we have potentially started to shift trend. So currently holding the EMAs, this is a good sign. Price is starting to push away again, and we are off. This is where I would consider taking profits on this trade. Why? Because we now have a lower high compared to this high, and this move here has given us a new low. And as long as it creates another lower high, that's a confirmed change in market structure and price is getting ready to reverse. So this trade here, we would close it out. That'd be a nice 3.65 to 1 trade. And I can also see that we've rejected around the bottom of this vector candle, and it happened on increasing volume. So if a price rejects a key area on increasing volume, then start to look for signs of reversal. Now with this move up here, I can see whilst the move is great, the volume has started to die down. So we can see that because the candles have changed from green to blue, showing us that volume is slowing down. And then there are no high volume candles through that 800 EMA. Remembering when price breaks a key level, we want to see it happening on increasing volume. That's not increasing volume, that is volume dying down. So now I'm going to drop down to the 15-minute time frame to see if it's a little bit clearer there. I can see we have a high volume candle to the upside, large wick, and this is going to be marked out as my trapped traders zone. So I am looking for early signs of a change in trend. What does that look like? It's going to look like a lower high that fails to get back into this trapped traders zone, or it comes back in but it's just a wick or bearish candlestick pattern. So let's play this forward. So I do have that lower high now that has formed below our trapped traders zone. This is going to give me an entry for a short position. So now that I have my entry on the 15-minute, I'm going to zoom back out to the 1 hour time frame. So our first area to watch always going to be the EMAs here. I can see this one lines up with this unrecovered vector candle, but if price can break the EMAs on increasing volume, then we should be looking to the next target. So we have the 200 EMA, also has Confluence with an unrecovered vector candle. The main one I want to pay attention to is the vector candle where the sellers essentially gave out and the buyers won. So that is this candle here, which pretty much takes us back to that resistance, now support area. So let's play this out. I can see price has broken the 50 EMA on increasing volume, and it has also created a new low. So as long as we can get a lower high from this point, then we would continue to trade in line with the new bearish trend. Okay, so this created a new low as well, and currently this is still a lower high, and that is the bearish railroad track. And great, our take profit has been hit, so you would close this trade out and go about your day. So in this example, we used volume and market structure to give us an entry for a reversal. But what happens if you didn't take the aggressive entry for the short position and now you're waiting to get in on the move? This is when you would wait for market structure to change. So we have a lower high, we now have a new low, and if we get a lower high, this is when you can take the entry, which is what we call the conservative entry. So if I draw a fib from this recent high to the new low, we can see that price came back to the golden pocket, and then we had many wicks to the upside. So you may have considered to taking an entry with a stop loss above previous market structure, with the target being the same point we talked about before. So let's go out to the 1 hour time frame again and reassess the market. I can see that we are in a new week. This point is the lowest point price went to in the previous week. So I'm around a key support area. If price can hold that on increasing volume, it doesn't have to be perfect by the way, then I might have something to look at, especially being the start of a new week. So I'm going to drop down to the 15-minute time frame to see if I can spot an early reversal pattern, which is going to be a W formation. The first thing I can see here is we have held this support area. So I'm going to mark out this unrecovered vector candle. That's going to be my area of interest to watch and see if we can create a higher low. We're looking for bullish candles. This would have been the entry. My target is going to be the next unrecovered vector candle. However, I have to pay attention to the 200 EMA. Let's play this one forward. We have volume through the 50 EMA, which is still a good sign. And let's see if we can hit targets. Yeah, great. So now that we're back out on the 1 hour time frame, we can see that our target area has broken on increasing volume, and we've also broken the 50 EMA as well and created a new high. From this point here is where we would start to look for conservative entries. Ideally, we want to wait for price to start pulling back, which it has done here. So now we can draw a fib from the peak formation low to the new high and pay attention to our Fibonacci levels and find the one with the most confluence. Now that I'm on the 15-minute time frame, I can see that we've held the 50 and the 200 EMA here and started to push away with volume. If this is going to push away, then it's just one of those ones where we have to let it go and not chase the trade. So let's see how this one goes. Okay, cool. Price has come back down. Good start. So I can see that we have held the golden pocket and we have follow through with volume. I don't like this big red candle, so I'm going to let this play forward a little bit more. Okay, it's starting to pull away. I have a nice hammer there, and this candle here, that would have been enough for me to enter because we're essentially consolidating above this golden pocket area. So my stop loss would go below previous market structure, and now I have to weigh up whether it is worth my risk to reward back to my target. And I can see that it is a 2.28. That isn't enough for me to enter a trade. However, depending on what your trade plan is, you may have entered. Now I'm going to go back out to the 1 hour time frame because we are just using the 15-minute time frame for our entries. Price has reached our target point and now we would exit. Before you hit that buy or sell button, you should already know where your take profit is, and just as importantly, whether the trade actually meets your minimum risk to reward. For some of you, that might be a 2-to-1. For others, it's a 3-to-1. Whatever your plan is, stick to it. Because if the trade doesn't meet your minimum risk to reward, it's not your setup, and that means you don't take it. It's as simple as that. Now, if price hits your target, great. If it doesn't and you get stopped out, that's fine too, because you followed your plan and that's what matters. You're not here to win every trade. You're here to trade with consistency. Once you're in a trade, let the trade do the work. You don't need to sit in front of the screen and watch every candle. If you're in a long and the first red candle sends you into a panic, you're reacting, not trading. So set your level, take the trade, and go about your day. The best trades are usually the most boring ones. You waited, you planned, you executed, and that's what it's about. If you're ready to take your trading to the next level, whether that be refining your entries and exits, building a solid routine, or finally getting off the emotional roller coaster, we've built something that can help. Inside Trade Travel Chill, we've got 2 membership options, depending on how you like to learn. If you're someone who prefers to go at your own pace and focus without the noise, our business class membership gives you access to all of our trading courses, daily written market updates, and our custom trading view indicators, and every recorded live session, all for under $100 per month. If you want more support, our first class membership includes everything in business class plus live sessions, direct access to the team, and a community of traders to learn with in real time. You can sign up monthly or save with a yearly subscription, and yes, we accept crypto too, and there is a 48-hour money back guarantee, so there's no pressure if you just want to check it out. To grab your own membership, use the link in the description below. If this has helped you feel more confident with your entries and exits, then I've done my job. Today we broke down structure, volume, EMAs, and Fibonacci, not just individually, but how they work together, because that's what good trading is. It's not about reacting, it's about being prepared. So before you place your next trade, take a second to check. Do you have Confluence? Does the setup meet your minimum risk to reward? And if yes, then let the trade do the work. If not, skip it and wait for the right one, because that next clean setup is always just around the corner.